Hello everyone, Jesse Webb, Traders Pro. Market conditions, bullish in a bull market, remaining there, still towards the upper end of that range. We're seeing momentum pull back just a little bit here on that move yesterday, but we are seeing breadth continue to increase, and sentiment has been remaining about where it has been. So let's take a look at the buy-sell ratio. That's still holding positive right here at 1.54. If that buy-sell ratio is positive, that means that the green line here is above that red line. We're just not seeing it real extreme like we have seen in other uptrends, but that doesn't necessarily mean that this overall uptrend can't continue. It just hasn't been. There hasn't been a lot of participation in this overall uptrend this last month and a half or so. We'll see if that strengthens or if that ends up weakening right here. We're at the upper end of the trend on sentiment, but we haven't had another spike here to see if we can get up to that extreme range. That doesn't have to happen, but we have been, during this rally, we've had this real nice upper end of this sentiment range as well. S&P 500, if we jump in and take a look at that chart, we're still in that support zone. We're still in the buy zone here as well. So we have, as far as market structure or kind of the look of the overall price pattern, really nothing is broken here. Everything is still quite bullish. We're still seeing support. This little sell-off that we had in the last couple of days on S&P 500 was relatively insignificant, pretty small retracement with some looking for some support right here. So we'll see if we get any, bouncing. I've mentioned that really the three areas to really be watching before we really have any real trend concerns could go all the way back to 493, that 500 range on S&P 500. It could retrace all the way back to these ranges and still be in an overall uptrend. So we're at the upper end of that range, just realizing that any kind of counter trend or retracement at this point still doesn't necessarily mean we're at a top. But once things start to reverse, if we were to break down some of these levels, then those would be some areas to be paying attention to for a trend reversal. So we've got, these pullbacks and the loftiness of the market rally, that we're at the upper end of the range. We're at all-time highs. That starts to feel like things might need to be adjusted, and they certainly should, depending on your risk level. If you're feeling like you need to be able to start to move and allocate some money out of equities and over into cash or something like that, now is the time to be aware of the upper end of that range and your overall risk tolerance towards volatility. Let's take a look at a couple of sectors. I've got a couple of issues here with some of these splits. These ETF splits happen often, but we have had a couple here with consumer services and technology having a little bit of a hiccup right here, turning some short-term trends back to down and some signals back to hold. So we'll watch to see if that, if that overall breadth continues and we start and continue to see these sectors performing well. Commodities, we're seeing silver and gold really take off. Right here, we've got a nice move in silver. This breakout move in gold is still continuing, starting to see some gold names come up in those new buy lists. And also oil. Oil has been working inside of this range right here and kind of dipped back down underneath it. We'll see if that gets any acceleration to the downside, where it could hold up some support right here. And let's take a quick look at bonds also, and that's been a discussion point here. That trend is really starting to look, relatively stable here. We're bumping up against this next range. We could retrace back into this zone now and watch for maybe a refill of that gap or a retest. We could certainly continue this overall uptrend. Remember, that's a good thing. We want bonds to move higher. That means interest rates are moving lower. That means what the Fed is anticipating to do is working. The market believes in that, and that's been a part of this issue of the Fed dealing with interest rates in order to control inflation. And so all those numbers and all of those reports that are coming out are really, the market is looking at those, those two things. And any hint of a slowdown, any hint of a recession, because interest rates have been so high for so long, relatively long in terms of the last 10 years. And so those are some things to consider when you're looking at a chart of bonds. In the new buy list today, we've got some bioscience stocks, medical instruments, biostocks, biotech. Those are all still continuing to show up. PLSE, not up in that momentum zone. It's found some resistance there as well, but interesting price pattern as well, showing up at number 1 on that list. NNBR, which is a metal production fabrication company, really nice chart pattern here with a lot of support at this base now right here, and starting to work back up into this buy zone with a confirmation bar and some nice volume to go with that, of at least 50% over the prior day, and that's what we want to see. We want to see a breakout bar. Want to see some confirmation with some volume on that as well, if possible. Some other stocks in here to consider. I thought I saw, where was it? Right here, KGC, King Cross Gold. Another gold stock, so keep an eye on those mining stocks. Gold stocks starting to show up, starting to look like some trend reversal happening in some of those names as well. That'll do it for today's update. Everyone have a fantastic day today.